please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The Asian markets are more or less flattish early this morning after the positive close that we got in the US markets.
सरकार द्वारा लिए गए कदम देश को आने वाले वर्षों में विकास की एक नई लीग में रखने वाले हैं.
In addition to their own VAT on petroleum products, 42% of the central duties also go to the states. Therefore, a larger part of the oil kitty really goes to the states.
Both the players who are supplying these vehicles are Indian players using Indian vehicles with Indian technology and manufactured in India.
Today's weekly options expiry on Bank Nifty. So today, once again, at least in the first half, I don't think the Bank Nifty would offer you a clean play.
Oil Minister had requested the states also to look at the VAT component, because in some of the states the VAT component is high. It varies from state to state.
I'm still very bullish. I think the markets at every point in time, I've been waiting to see if there's a 10% range that the market trades in, but it's been trading in a lot less of a range.
Nifty is absolutely flat, 5 points higher, 9918.
September also has been reasonably good as far as settling into the GST regime is concerned. There are still a few operational issues.
I think it was expected that the rates are not going to go down in a hurry, and everybody will push RBI, and eventually they'll have to balance out inflation, economic growth, and the needs of the industry. So I'm hopeful.
The market's down about 15 points. Lackluster, I think, is the way you would describe market activity since the morning.
Okay, pretty flat day of trade, but important last hour coming up, considering it's the weekly options expiry on the Bank Nifty. This is Closing Bell. I'm Anuj, with me is Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. It's just not moving anywhere. The needle is neither shifting, on the right side, the left side. What a 50-point band.
Yeah.
Are you expecting this, options expiry volatility? And even if that happens, will it give us a concrete idea?
The options expiry is on the Bank Nifty. What's happened to Nifty today? We thought at least Nifty's got its mojo back. And the market needs triggers, Surabhi. The one thing which has got well defined is that at lower level there is buying, and 9700 has now been defined as sort of your bottom. It's gone there twice, it's bounced back from there. But every time the market is going towards 9950, 10,000, it's making heavy meal of that. I think maybe the market waits for the earnings season. This weekly options expiry, I think it's become a bit of an irritant for a lot of people. It's option writers' den right now. If you look at the Bank Nifty options, most of them are down 80 to 95%. So, and yesterday was policy, so the volatility was high. So you could have sold all the options yesterday. Of course, easier said than done. But that's how it's become, the instrument itself. But for a lot of people, it's option writers' den right now. If you look at the Bank Nifty options, most of them are down 80 to 95%. So, and yesterday was policy, so the volatility was high. So you could have sold all the options yesterday. Of course, easier said than done. But that's how it's become, the instrument itself. But on the Nifty, as we were discussing for the last 2 or 3 days, Reliance has become your go-to stock. Every time the market's in trouble, Reliance is bailing the market out. But I think that the range should break at some point. But right now, in the near future, you lack trigger, because even for the earnings season, the first couple of earnings would come from IT companies, which anyway don't contribute, have not been contributing much. So let's see if the bigger bank earnings could change it. But for now, a bit of a range is there for the Nifty.
Absolutely, and that's how we have spent most of this week. On that note, let's get you the market headlines this Thursday afternoon. It's a tepid day of trade, with the Nifty hovering around the 9,900 mark. Banks, oil and gas stocks drag in trade, while mid-caps outperform. Aurobindo Pharma gains almost 3% as the street hopes for drug approvals from the US market to pick up after sources tell CNbc TV 18 that Unit 4 has received an establishment inspection report from the US FDA last week. It's been a stellar listing for Pratap Snacks on the exchanges. The stock lists at a 35% premium to the issue price. The management tells us that they're expecting minimum 20% revenue CAGR for the next 5 years. The stock, however, is off the highs of the day. Shoppers stop buzzing in trade. CNbc TV 18 learns that Future Retail is all set to acquire supermarket chain Hypercity today. The deal is likely to be at a valuation of 600 to 700 crore rupees.
Okay. By the way, the currency has been strong today. Intraday, there's been a bit of a rally that you've seen on the currency. But how should you position yourself in this last hour of trade? Ashwini Gujral and Mitesh Thakkar now join us with closing strategies. Good afternoon. Ashwini, being range bound, do you see this range breaking? Maybe not for the day, but at some point, how would you trade the index at this point in time?
Well, I guess there is a bit of a ranging movement that's happening. That range is very small, 9900 downside, 9950 upside, at best 9850 downside, 9950 upside. Now, my sense is this is equilibrium, 9900. So it is neither 10,100 nor 9,700. So basically the market needs fresh information in terms of how bad the GST impact, etc. is, so that it can take the next direction. Because the problem is, to fall, we need bad global cues, and to rise, we need good local cues, and we have neither. So right now it is basically individual stocks that you can look at. In every sector, 5 stocks go up, 5 go down. So broadly, everything starts to become a little range bound. As far as individual stocks are concerned, I think Century Textile is a buy with a stop of 1250, target of 1290. Future Consumer is a buy with a stop of 60, target of 74. And Adani Enterprises is a buy with a stop of 117, target of 130.
Okay, big move actually on Century Textiles, being one of those stocks where we have seen big intraday moves. But Ashwini, follow-up thought then. So this mid-cap action, that's likely to continue till the market gets a trigger to either break out or break down?
See, obviously now all stocks cannot become range bound, so something will keep going higher and lower. That way, I think mid-cap action should continue, and every day, certain stocks will move up 5 to 8%. But overall, large cap indices may remain range bound from here.
Absolutely, and it's been that sort of a day. I mean, the kind of mid-cap stocks that have moved up, they're not really mid-cap leaders. The likes of D-Link, Gravita, of course, Apex Frozen Foods. They're not the biggest of blue-chip mid-caps that we usually talk about. But let's get in Mitesh's thoughts on the day's action as well. Mitesh, what have you made of this very narrow range that we're now pretty much trapped in, and your stock calls?
So I think, we're still waiting for a trigger on the index, and to me, as I said, I think it remains a stock-specific market. We're approaching trading with that. I think a bank nifty move, possibly could happen today, and that could maybe give some more clarity. So if the bank nifty starts getting past 24 to 20 on the upside, maybe we'll have some rally on the bank nifty to about 24,500, which is the bigger range. And 24,500, 23,900 is the contrast for bank nifty, and nifty, I think 9950 clearly is the breakout point, and 9870 in the downside is the breakdown point. So as of now, I'm trading neutral on indices, but stock specific wise, it's been more of long ideas. That's where the action is happening. Century was a buy for me as well. It's moved up, so try to buy it around 1265 with a stop at 1250 for targets of 1290. Sorry, buy with a stop at 1244 for targets of 1300. And Jubilant Foods was another buy. Again, this is stock which has rallied in the last 10-15 minutes after I mailed the call. So try to buy it around 1455, 1450 odd levels with a stop at 1425 for targets of 1520.
Okay, all right. So those are some of the calls for the last hour. Time now for our Stock 360 segment, where we, of course, look at a stock from all possible angles, fundamental and technical. The stock in focus today is Zee Media. Corporate action, part of the business moving out. Sonal has all the details. Sonal?
Well, thanks a lot for that, Surabhi. Now, today, Zee Media is trading its print business. Now, remember, print business will be renamed as Diligent Media Corp, and company says that it will be listing its print business at the earliest. Now, talking about the financials, the print business contributes around 20% of the total revenues, and it is a loss-making business. Remember, the EBIT loss is around 35 crores. Now, talking about the television business, which will be remaining, now, FY17 revenue for the company was at around 450 crores, and EBIT was at 73 crores. We spoke to the company today. They said that the revenue growth will be at around 18 to 20%. So going forward, they expect that the revenue will be at around 550 to 600 crores with an EBIT of 90 crores. Now, the closest peer to Zee Media is TV Today, which trades at 15 times EV EBIT. So valuing Zee Media television business purely basis EV upon EBIT, we get a valuation of around 1500 crores, which is very positive. Now going forth, by FY19, the company will be consolidating its radio business and the revenues will be shown in its accounts. Now revenue from consolidated business in next 2 years is expected at around 1000 crores, and also average EBITDA margins are expected at 25%, which gives us EBITDA of around 250 crores. Debt levels will be at around 1600 crores, and the company said it's refinancing its debt cost, which will be averaging at around 8 to 9%. So adjusting for the taxation for the finance cost, we see that the profits will be at around 85 to 90 crores. Now remember, in FY17, the company had loss of around 16 odd crores. Going forward, this loss will be getting converted into profit. So there's a huge value unlocking for the company, and yes, we'll keep a close look for the stock. It's in the stock going ahead. Back to you.
Okay, Sonal, thanks a lot for that. SP Tulsan of sptulsan.com and Prakash Diwan of Altamount Capital with us now. Good afternoon, Mr. Tulsan. This was one of your favorite stocks, and I remember, the theme was that once the loss-making print business is out, it could see a big turnaround in fundamentals. I want to understand how do you deal with such stocks? This price mechanism, it clearly is not working because you have a circuit, I think, from the base price or whatever, and the volumes are very low, and on that it's been frozen through the day. Where do you see the stock headed, and what do you think would be the right way to approach some of these stocks which go through these sort of relistings?
Anuj, you are right. In fact, we have taken this theme of this print loss-making print business getting hyped off, because let me just quickly remind our viewers that the print business is publishing DNA from Pune and Mumbai, and Pune edition was closed about 1.5 years back. So DNA English edition from Mumbai, that print business, we in fact took a call about 1.5 years back that it will get hyped off, and that is what exactly it has happened. But then thereafter, the one big development which has happened, that acquisition of the radio business, that is big 92.7 big FM, from the ADAG group. The group have acquired for about 1500 crore, and that is seen to be quite a big trigger. Now, if you have this print business out from the company, and now the existing company is purely the 10 channels, the news channels, and if you take a call on those all 10 channels, in all the geographies, they have presence in Bihar, UP, Madhya Pradesh, Punjab, and in every geography they have a market share of more than 50% in terms of that news channel. So all the 10 channels are doing extremely well. You add the radio business, so it will be a combination of TV Today and ENIL. Because if you really take a call on the radio stations, about 54 radio stations will be there, of which 42 or 43 is already operational, and 13 to 14 radio channels will go operational maybe in next 6 months or so. And the consideration which I have said, 1550 crore, is for the entire amount, for the entire 100%. In fact, there are only for the regulatory moves, some token amount of 10-15 crore will be paid after about 18 months or so to make the 100% ownership. That is just to meet the guidelines. Now, coming back on since you have raised the point that the restructured price is not matching, let me just draw the attention here that 4 shares of Zee Media got 1 share of this print, and both are having face value of 1 rupee. So effectively, if you really ask me, I honestly don't see any value in the print share which will be issued, even if you take a roughly at about maybe 2 rupees, which may look little what you call quite low, and maybe momentum can make the print share also to move up to 5 rupees, because if you have any share from the Zee stable, and if you say that it is in the print media, anybody will give maybe couple of rupees, much more than couple of rupees for that stock. So I will take the realistic value at 2 rupees. I'm not giving any value to the business. It is only the infrastructure, maybe the printing machine, printing presses, real estate, and all sort of things which can fetch this kind of valuation. So if you take about, you are right that about 8 rupees have been hyped off from, because as I said that four shares. Not 8 rupees, because if I say 4 shares have got 1 share of print media, and if I say take even 4 rupees as the value, at which the print share will get listed, the Zee Media should have, had a X write-off about, or maybe X restructuring minus 1 rupee. And exactly that is where we are seeing the share today. Now it is in the trade to trade, because when you see the price discovery mechanism and post restructuring, share will remain in the trade to trade space for next 10 days. I'm referring for Zee Media, and rightly so, because after the management commentary and after having purely seen as a radio and TV company, this will be having tremendous value. So today it is frozen on NSE, it is frozen at 36.20. On BSE it is frozen at 37.15. Because as I said that now it will remain for next 10 days in trade to trade. Probably I won't be surprised to see it hitting upper circuit for next couple of days or maybe next 3 days. But on a longer term horizon, I see huge value seen in Zee Media, and that is what it will get, what you call reflected once the radio business will start coming in. Because if you take a profitability of the existing TV channels, probably 3 times of that can get contributed by the by the radio channel. So these are the overall working and mechanism of the restructured company as well as of Zee Media.
Okay, that's the Zee Media. Gujarat government has cut VAT on petrol and diesel. We don't know by how much. Now keep in mind, when excise duty cut happened, at that point the thought process was that now states must move forward and cut VAT. It should not be surprising that the first state to cut is actually a BJP state, and that too a poll-bound state. So that's Gujarat. This has no ramifications, of course, for oil marketing companies. They move on sentiment. So moving a bit up on IOC, HP and BP. But
I guess it's first off the block. I mean, the first of the states. Now, obviously, this is Gujarat. I guess, Anuj, the question is whether the non-BJP states will also sort of I think comply and be with the centre.
That's the big one.
Yeah.
I think, look, Surabhi, the BJP states, there are 18 states in which I think the BJP and NDA now rules, and most of them are big states, Maharashtra, Gujarat. So clearly, the BJP state should move first, and Gujarat, of course, is poll-bound. So that's the one where we have seen the move. But it should happen at least in the BJP states. Whether it happens on non-BJP states, I think jury is out on that. But Mr. Tulsen, your thoughts on this?
See, that's right, that maybe if you have a if you have the BJP government at the center and at the behest of that, when the oil minister is saying that all the states should come forward and cut the VAT, probably, that all the BJP ruled state will respond to that. But if you see the hue and cry having made by the opposition, I think this should have been, without at the behest of, or maybe without having made any request by the oil ministers. See, this shows the sensitiveness of the opposition, or maybe the politicians. They just shout for sake of shouting and making issues out of that. Maybe the opposition party should have taken suo moto move much prior to that of by cutting the VAT if they are really so much concerned for the common man that petrol and diesel prices have been moving up. So across the board, it is good that BJP ruled states have taken the initiative, but I was expecting this move to get initiated by the opposition party first, to put a slap on the face of the ruling party, which has not happened. So this clearly shows the kind of hue and cry which are made by the politicians just for taking the mileage and fooling the public, and not for taking care and interest of the common man.
Okay, by the way, the oil marketing company stocks are actually rallying because actually it does not impact oil marketing companies one bit. If at all, it actually benefits them, because what it means is that the volumes go up.
Consumption goes up. Typically, it is a sentiment thing, right?
Exactly.
And 5 rupees, I guess, is a big number for a consumer.
Exactly. You're talking about huge number of liters, so, and that's been the trend for oil marketing companies. At every lower level, there's been a bit of a buying as well. Prakash Diwan is also with us. Prakash, good afternoon. Your thoughts on, let's discuss the oil marketing companies first. They've corrected a bit. Would you buy them?
So, this whole under pressure in terms of reducing the prices by just an excise cut and now a VAT cut is fine. I mean, but if it doesn't percolate down to any margin erosion, I mean, I would be okay with the OMCs, the state of the OMCs. But you never know politically this is, and why Gujarat has happened is, of course, one, that it is a BJP-ruled state, but also because the election coming through, they would have restrictions to announce anything that seems like populist going forward because of the restrictions. So you'll probably see this getting followed. My sense is the OMCs probably will have to wait to see how deep the impact would be, and then the pressure on the government side could possibly come through. And you also have HPCL going through this whole corporate action cycle, which is also thrown it into a little bit of a confused state in terms of where things are headed. So I would give it time. What I would look at is, when this happens, it does tell you that if you're not looking at oil marketing companies and then looking at the sector as a whole, there could be a lot of other things that spin off from this. And if you look at the way Gujarat Gas Company has increased PNG and gas prices itself, the pipe gas prices have gone up significantly in Gujarat, and then Gujarat Gas is doing this across the entire network. That's going to start taking center stage. So you look at the gas companies rather than just the oil marketing companies, and you'll probably see a lot of benefits coming through, because that's where there's a lot of build-up happening in terms of benefits.
Okay, we're going to take a quick break on that note. By the way, the reason you're seeing India Cements spiking up perhaps is there were just reports that we saw earlier on the ticker. There's about a 2 to 3 rupee price increase on cement. So India Cements is the one that's rallying. It's not alone. A couple of other stocks also moving higher. JK Lakshmi, Ultratech, some of these names, even Grasim actually for that matter, is moving to the highs of the day. Anuj?
Yeah, I mean that India Cement move is big actually, and we I think saw some news from Cogencis as well that there's been a bit of a price hike, but from the lows, quite a bit of recovery for these stocks. Our closing bell money control question of the day is Prime Minister saying that it's unfair to judge based on 1 quarter of slow growth. Do you agree? Log on to moneycontrol.com, post your responses, and post 3:30. We'll read out the best.
Okay, let's just stick to the cement space for a bit to understand this. Mr. Tulsian, almost all stocks are running across market capitalization, the biggest ones, the mid caps. We do understand that there is a price increase of around, I think, 2 rupees a bag. How do you view the cement space right now, and would you advise any fresh purchases?
See, so there will be no surprise on the price increase if you have the tailwind seen for the next 9 months. And in fact, for last 1 week or so, we have been giving a buy call on all the cement stocks. And if you see, probably the price increase have already started happening in the western region, in Mumbai and other parts of the western Maharashtra. And the things have now started getting spread into the southern part also, mainly in the Andhra and Telangana, where the huge amount of construction activity is going on. So I think it is just a matter of time that we will be seeing an increase of about maybe 20 rupees per bags in the next couple of months. But I am not here banking more on the price increase. It is more of the capacity utilization because of the 6 to 7% consumption growth estimated for the cement industry for this financial year. And that will be seen giving huge operating leverages to all the companies. So those the companies who have not been performing good till now, maybe like India Cement, Century Textile, having very low operating profit margin or EBIT margin, will be seen the biggest beneficiary. And probably because of that, India Cement, Kesoram, JK Lakshmi, Century Textile, they all fall in the same category. But we have been giving a buy call on the efficient cement makers also, like maybe Ultratech Cement or maybe Ramco Cement or maybe ACC Cement, ACC, because of the expected merger of ACC with Gujarat Ambuja Cement likely to happen, and maybe swap ratio seen coming in favor of ACC. So overall, positive view on all cement stocks.
Okay, that's definitely a hot space this afternoon on the street. That's cement stocks surging. Let's also get in Sandeep Wagle. Good afternoon, Sandeep. What are your trades today?
Afternoon, Surabhi. I would go with the buy in a DCB Bank, stop loss of 185, target of 195, and a buy in a Century Textile, stop loss 1255, target 1320.
Okay, Sandeep, thanks a lot for your time. Well, there's something up with the textile stocks as well, not just Century Textiles. And some of these are, of course, garment plays as well. So let's pull out the intraday chart of Raymond and Arvind. I think there's a big surge happening right now in both of them. Arvind in particular is a phenomenal move right now, and it's one of those stocks where when it moves, it moves big. Before I invite our next guest, Ashwani, thoughts on Raymond and Arvind?
See, Arvind is range bound between 360 and 420. So whenever it gets closer to 360, it tends to have a sharp rally. Could get back towards 420 without anything much changing. I think Raymond is probably the better of the two, and out there I think post a correction it's again begun to move up. Chances are it'll hit previous highs of 915, 920.
Okay, now let's invite our the guest for the newsmaker segment. How's the market position ahead of Diwali, and what should be your strategy going into the next year? Ganesh Ram Jayaraman of Spark Capital is with us now. Ganesh, good afternoon. Good to have you in our studios. You know, it's been a bipolar market for some time now. Financials doing well. Now, of course, we have started to see oil and gas and, you know, stocks like Reliance also contributing. But as a portfolio manager, how would you position yourself for, say, next 1 year?
See, we are seeing the first signs of challenges appearing. About 3 months back, we wrote a note saying that the clouds are appearing on the horizon for the first time in close to 4 years. But we wanted to watch and see how it further progresses. We didn't get too much comfort, and the data isn't comforting enough. So we've turned a lot more defensive in our thought process. So we are recommending a portfolio bias shift. We think there are some challenges. We put it in 3 different buckets. First is on the external front, the rupee, the current account deficit, and the impact that can all have on how margins and earnings growth can take shape going into FY19. And there we see some challenges. The current account deficit is widening. The bond flows, which drove a lot of the capital account surplus, could struggle if our call on some of these play out. The second is on fiscal, where we think there could be first signs of fiscal challenges, which could either have a growth impact or on fiscal deficit. So we are getting into this trade-off territory, which never is good for earnings or for multiples. And the third is how we see likely inflation trajectory going into next calendar. It's not a concern at all today, but I think going into next calendar, we see some supply side pressure, some global commodity price imported inflation, or the impact of even food inflation locally could start having impact on our assumptions, which we seem to be extrapolating. The market has been extrapolating a fair bit of the last 3 years numbers on cash flows, on margins going into next year. And there we thought it's not too wise. FY19 could be quite different to how the last 3-4 years have been.
You know, I'm just seeing the portfolio construct. You're actually underweight on financials, and you're overweight on sectors like IT and pharma. So that's quite a contrary call to the general wisdom on the street. Underweight financials, meaning, I mean, you don't like anything at all, or is there a specific pocket? And what is the concern? Valuation or credit quality in certain cases? What's the issue?
I think clearly underweight is, we have dropped for about 4 years, we had a 35% recommended weight on financials. We have dropped it to 25, mainly due to our view that wholesale interest rates with the next 6-9 months view, given the 3 concerns that I highlighted, which is on the fiscal side, the inflation side, and how we see the rupee impact, you juxtapose all of them. Our view is that wholesale interest rates will be heading higher in the first half of calendar 18. That will put pressure on fair bit of the margins, especially for NBFCs or banks which have a bias towards, or their liability franchises are more biased towards the wholesale market. So there they will see some pressure, which is why we are telling funds these are all the 3 times, 4 times book financials, earnings growth 25% penciled in. There could be disappointment in them. Lighten up on that space. That's the crux of our call.
Okay, that's interesting. In the mid caps, are there any themes that you're working with right now? Because that's been the clear game in town. I mean, that's where you have generated most of the alpha.
Yeah, mid caps are more management quality, management strategy specific, a lot less to do with how the macro might take shape. So there it's more question of which companies managements are getting the call right. So we tend to be more sector agnostic when we start looking into names. But even there, some of these concerns which I told you will start impacting how some of the earnings on those sectors could take shape. So yeah, we have our buys across sectors there on the mid-cap side, but even there I will not be penciling in aggressive growth estimates because a lot of the tailwinds that we had, see, let's keep in mind that we had a very kind of an unprecedented blue sky scenario. We had government spend being very high, but fiscal deficit not deteriorating. We had low inflation, we had rupee appreciation, and we had interest rates falling. So all of this led to a lot of growth buoyancy, or rather margin buoyancy, more than not top line growth, but more of margins, and converted into some headwinds. Some margins, some earnings could get impacted there as well. So what I am telling our clients is don't build in aggressive estimates, don't build in aggressive valuation multiples, reckoning these into 19, there could be some disappointment. Instead, buy stocks where estimates are not buoyant. So which is where a rupee concern, which we have now, we are penciling in 70 to the rupee. And when we pencil in that, IT gets very interesting.
I was just going to come to that. So is IT an overweight for you only because of the rupee play, or is there something structurally changing? Because this has been a dog of a sector for a long time.
Yeah, there is one important change which has been playing out in the sector. If you go through the annual reports of most of the larger IT companies as well, their cash flow profile is actually improving a lot. It's not showing up in their margins or on top line growth, but companies have been able to demonstrate in the last 12 months a far better working capital cycle. So their cash flows are growing in excess of 20%.
But Ganesh, cash was never a real problem for IT companies, right?
True.
Growth was a bigger issue.
Which
growth
is exactly why we think
yeah.
it is something we are looking at. We are not just looking at growth alone. We think market, if the earnings are not on a declining curve, which rupee will ensure that they aren't, we think market will start looking at the improving cash flows or give it a lot more importance than what it's currently giving. That makes, so there is one structural change happening on cash flow profile there, which we seem to be or willing to ignore. That could come into limelight if the earnings don't degrow.
All right, Ganesh, thanks a lot for your time today. Always good talking to you. That's the view from Spark Capital. By the way, the 3 p.m. Factor is not working at all today on the Bank Nifty, but individual mid caps are doing well. We spoke about Arvind, that's moved to the high point. Zee Entertainment has also moved to high point. Time to take some of the queries then from Twitter. The first one is from Nagesh. He has 100 shares of Kotak. Okay, bought at 294. He wants to know whether he should hold, sell, or add more. Ashwini?
Well, he can easily add more and get his, break-even price closer to 650, 700, and then keep an overall 850 type of stop, and maybe look for next targets coming in at about 1500.
Okay, let's move on to the next query. It's a question from Sumanta, who has 1700 shares of Coal India. The buy price is 178 rupees a piece. He wants to know what to do, hold on or sell out. Mr. Tulsian, we're just looking at the latest dispatch numbers, production and dispatch numbers from Coal India, which seem to be good. It was slightly ahead of their own targets. How do you view the stock?
See, I don't think that there is any point in taking the near-term or short-term target on the dispatches front, because if you have been seeing now, there are all around coal shortages by the steel and power and all sort of things. So we are seeing these kind of numbers. But if you take the larger picture, maybe on the yearly targets, the company has not been able to maintain or stick to their schedules or their targets. So I'll advise that it is not good, because this investor is making a gain of closer to about 100 rupees or so. So better for him to shift to some other natural resources stocks, maybe like iron ore or manganese ore, where MOIL, NMDC, though NMDC have reduced the prices of iron ore yesterday for this month, but still both those have a better earning growth visibility rather than the coal as a natural resource. So I'll advise him to book profit and move to the other stocks like maybe NMDC, MOIL, Sandur Manganese, or maybe these kind of stocks.
Okay, the next one is from Manish. He has 800 shares of JM Financial, bought at 136. He wants to know the target price, Ashwini, over the next 3 to 4 months.
I think, all of these broker dealers are doing well. So 185, 190 shouldn't be a problem. But keep a 120 type of a stop, because it's already run up quite a bit. But I think there's still more to go here.
Okay, next query is from Avinash Patra. He wants advice on SBI Life and ICICI Lombard. He hasn't told us whether he got allotment or whether he's looking at buying now. He wants to know which one would be a good bet. Mr. Tulsian?
See, I'm more bullish on the life insurance space, but he has chosen one as life and one as general insurance. SBI Life, because that's into the life insurance space where we have a more positive view. But if you take a valuation call, then ICICI Pru is looking cheaper or better on a valuation parameters, though he can go for both ICICI Pru or SBI Life. Coming specifically on ICICI Lombard, I'm not saying that the stock is bad, but the general insurance companies will not be able to give you the kind of gains which we can expect more from the life insurance. So if you can skip one can focus on both the life insurance, that is ICICI Pru and SBI Life, that would be better. Or if he still wants to go with ICICI Lombard and SBI Life, even those are not not the bad choices, but with a long-term view of about 12 months or so.
Okay, our last one is actually a brave trader, Amit Patel. He has shorted Mr. Tulsi and Pratap Snacks at 1280. He says that these are crazy valuations, and I thought I'll just take, to try my luck and short it. Will I make profit by end of the day? Your thoughts on Pratap Snacks? It's already off the high point.
See, Anuj, already this trader is making a profit of 100 rupees because now the stock is ruling at 1180. He has been right in taking that valuation call that fundamentally the stock is definitely looking stretched, which we have also been saying so. But I don't think that this is the right strategy. In fact, I would say that since he has made this profit, he should not repeat the same strategy with all the newly listed stocks purely on fundamentals. Because on the first day of listing, fundamentals doesn't work. You have missed so many other factors, the technical factors, grey market, trades getting executed and all sort of things. If he get caught at the wrong end, then he can even get butchered also. Though he has made 100 rupees gain now, but take this as just as an entertainment for a day and never repeat these strategies for the future, because you will get to see practically every week one IPO getting listed. So he should not repeat the same strategy purely on fundamental valuation and start going short in cash segment.
Yeah, absolutely, Mr. Tulsi, and take that advice with both hands. You don't want entertainment to get too costly, not for your portfolio, right? Thank you so much, sir, for being with us on the show as always and taking up the viewer queries as well as giving your...
Well, it's been a mid-cap day. The Nifty is at the low point of the day, but that's not saying much. Down only about 28 points or a quarter of 1%. And the Bank Nifty also down about the same 0.2%. But the mid-cap index still holding firm. Advanced decline still in favor of advances. Couple of stocks. Bharat Financial Inclusion, this 2 to 3:30 period specifically is reserved for some of these MFIs. Is it once again a bit of a big move on that one? And the other one is Petronet LNG, which has been one of the strongest stocks. So that one actually is now at the high point of the day. Petronet LNG has made a bit of a move. Ashwani and Mitesh back with us for BTST calls. Ashwani, any point taking home any index positions, or would you want to go home on clean slate and see how things move tomorrow and stock calls?
Well, it's not a clean break. So, generally when from key levels moves happen, it should be, fairly decisive. There's hardly, 20 points this way and that. But it's clear that 99.20 is causing a lot of trouble. So I would think, calling it range bound between 98.50 and 99.50 would be a better way of looking at it, because we should have moved with great amount of force from 99.20. As far as stock calls are concerned, ACC is a buy with a stop of 1680, target of 1760. Phoenix Mills is a buy with a stop of 540, target of 575. And NIT Tech is a buy with a stop of 560, target of 585.
Okay, those are Ashwini's calls. By the way, ITC has lost quite a bit of ground in the last couple of minutes of trade. It's doing its bit in pulling down that Nifty by an additional couple of points. That's the one weak link for sure that is standing out. Mitesh, let's come to you as well. Considering how range-bound we are, what are you going with, sells or buys?
No, I think it's just a narrow market, so I think I'm pretty okay carrying long positions. Only below 98, 70, 50 would I, look at finding out more of short trades. So for the time being, the breadth is also positive, so that's encouraging. I have a buy on or BTST in Berger Paint with a stop at 253 for targets of roughly around 264. And CG Power, that's the other stock which I like as a BTST call. Again, keep a stop below 79.30, look for 82.5, 83 kind of target for tomorrow.
Okay, Prakash, before we let you go, I just wanted your thoughts on the move in BEML for last 2 days, because I think in the past you've liked this stock, but how would you approach it from here on?
So I think it's more to do with, one was of course the trigger that we heard from the government's divestment plans, but the opportunity to get in was when the Karnataka state probably requested not to go through with that whole divestment plan and stuff like that. So these yo-yos definitely give you that chance, but I think now the fundamentals will start becoming the the more impactful numerator for the company to start looking at, especially growth from the mining side, growth from the road construction side. Now, if you look at the way expansion is happening in terms of the kind of plans that most of the road operators have, there's huge demand for capital equipment that is likely to come through. So the railways, road equipment, defense, all of that makes it a very nice sweet spot that it finds itself in. So I'm quite positive on this, but don't expect any fireworks just on the back of this move that was precipitated by the government's decision to get a strategic investor in that. In fact, you could look at some of the players who are possibly getting in as a decent upside that would come through if they have a chance to buy any of this stake in this company.
All right, Prakash, well, thank you on that note. Thanks a lot for taking time out for us today. Let's get an insight into dealing room chatter then. Nimesh is here to talk. Nimesh out for us today. Let's get an insight into dealing room chatter then. Nimesh is here to talk. Nimesh, pretty range bound today.
Oh yes, pretty range bound, but there is a lot of action in the mid cap and small cap, Anuj, and that's the feedback actually coming in that there is a lot of trading activity going on at the retail and the HNI desk, and that probably shows the big momentum we are seeing in the mid cap and small cap. Having said that, the feedback is that in the single stock futures, some of the influential names have been reducing their positions. That probably explains that they are using this rally to lighten the positions in the mid cap and small cap. So that's the word of caution out there coming in from the dealing rooms. As far as the technical levels are concerned, I guess from the Nifty, 9950 is the next level to watch out. That's a very strong resistance. If that gets taken out, probably you'll see a new high on the Nifty in the near future. In terms of institutional activity, while it's on the lower side, I'm told that there is some bit of bargain buying coming in the IT names and pharma names into the trade. In fact, there were some blocks as well in some of the large cap IT names into the trade. So that's been the pretty much day. Pretty much a lot of action in the mid cap and small cap. But on the institutional side, it's pretty much on the lower side. We just clear up some bit of bargain buying in some of the pharma names and IT names.
Okay, Nimesh, thanks a lot for that. By the way, the currency is almost back. I mean, not quite to the highest point, but that scare is clearly over and now sustaining at 65. We'll take a break, and up next, we'll get you snippets of the conversation that we had with N. Jayakumar.